Good day, Junior Tickies. I'm Mrs. Brimmercombe. We're going to look now at Budget Activity 3. 3.1 Concepts on Budgets. Number 1, explain the difference between cash budgets and projected income. So if we're looking at the difference and we're looking at cash budget, it is expected bank balance, expected cash receipts and payments. Those are the key words, and ensure that you understand why do we say expected. Budget is looking at what do we expect to happen in the future. We need to plan. Projected income statement is our expected net profit or loss for the budget period. What is our expected income and expenses for the budget period? 3.1.2 mention 2 expenses that will not be included under payments in the cash budget. So when we're looking at things that will only appear in your projected income statement, think about, does this income or expense affect the bank account? If the answer is no, it means it does not appear in the cash budget. It will only appear in your projected income statement. So here they're specifically only talking about expenses. So these are examples of expenses that will only appear in your projected income statement. Depreciation, discount allowed, loss on sale of an asset, trading stock deficit, bad debts. Question 3.2, cash budget and projected income. The information was taken from the records of Blue Stores. The financial period ended 31 March 2022. Required indicate amounts in the appropriate blocks for the cash budget and the projected income statement for 2 months ending 31 May 2022. Use a plus sign to indicate projected receipts and income, and a minus sign to indicate projected payments and expenses. In accounting, a negative amount is also shown in brackets. Transaction 1. Rent expense for the year amounted to 122,400. The rent will decrease by 500 from 1 May 2022. So first we need to find out, but what is the monthly expense? If they provided us with the rent per annum, it's 12 months. So to find the monthly, take 122,400 divided by 12. Now this is my monthly expense. For April, we need to budget. This is an expense which we need to pay as well. This is why it appears in the cash budget as well as in the projected income statement. But now from the 1st of May, the rent will decrease by 500, which means that my expected payment is 9,700. My expected expense is 9,700. Must be shown in brackets or a negative sign. Otherwise, you're going to get it wrong. Number 2, on 1 April 2022, 18,000 will be paid for a 3-month advertising contract. So advertising is an expense. So it will go in your projected income statement. But now we need to budget that we're going to pay for that expense, for that advertising. And it specifically said 18,000 will be paid. So in my cash budget, I'm going to have 18,000 in brackets for April. And my monthly expense is going to be 6,000. 18,000 divided by 3 means 6,000 per month. Be careful with this. It goes into both, but the amounts are going to be different. Number 3, goods were sold on credit for 80,000 in March 2022. Debtors are expected to pay in April 2022, and they will be allowed a 7% discount. So we sold goods. We expect money to come in from our debtors the following month, which is in April. So I'm not going to show sales as an income. It happened in March. What I need to do is I need to show, but we expect 80,000 times 7% discount will be given which means that we expect only 93% of that amount to come in. So to indicate this now, our receipt is going to be 74,400 for April. And then we need to show discount allowed is an expense to the business, which means it goes into my projected income statement. So in brackets, I'm going to indicate 5,600. Number 4, the expected cash sales for April 2022 were estimated to be at 183,750. The business uses a markup of 75% on cost. So what is happening here? Number 1, we need to show we've got an expected income, 183,750 because of sales, but because it's cash, that goes into my cash budget as expected receipt, 183,750. But now we need to calculate the cost of sales. Cost of sales is an expense, but it's not a cash item, so it will only appear in my projected income statement. The markup percentage is 75%, which means I'm going to take the cash sales figure times 100 divided by 175. And that is my cost of sales in brackets for April, 105,000. Number 5, an old vehicle will be sold for cash to Mrs. Smith in April 2022. The cost of this vehicle was 190,000. The accumulated depreciation amounted to 152,000. The business made a profit of 3,000 on the sale of the vehicle. Whenever you see asset disposal, open up the asset disposal account and we start with the cost. The cost was 190,000. You should know by now, it will always appear on the debit side in the asset disposal account. On the credit side, we're going to show the accumulated depreciation. They said to us the total accumulated depreciation amounted to 152,000. The business made a profit of 3,000. A profit will always appear on the debit side. So what do we need to calculate here? We need to calculate the selling price. We sold it for cash. So to work out the selling price, cost minus accumulate equals book value. If we sold it and we made a profit, we sold it for more than the book value, it means we made a profit. So to find out the selling price, you've got 2 options now. You can take the debit side minus the credit side. That becomes the balancing figure, 41,000. Or I can take 38,000 and I can plus the profit. Because if we made a profit, it means that we sold it for more than the book value. Then we need to add it. So start off, our expected receipt, we sold it for cash, which means we expect 41,000. That's what we needed to calculate now to come in April. We made a profit on the sale of the asset. A profit means that is an income. It appears in your projected income statement plus 30,000. Number 6, 21,280 will be paid to creditors in May 2022. A discount of 5% will be received due to early payment of account. So the easy part of this is identifying a payment will be made. A payment will be made in May, which means I'm going to show it in brackets, 21,280. The difficulty in this transaction is now to realize, but we've received a 5% discount for early settlement. Discount received is an income. Now, what makes this one more challenging than transaction number 3? In transaction number 3, they actually provided the total amount of outstanding balance. And then they said a percentage discount will be allowed to customers. Now they provided the amount which we will be paying. And then they said 5% will be received for early settlement. This means we need to take 21,280 times 5 divided by 95 to find out the discount that we will receive in May. Discount received is an income, so plus. Number 7, commission income for the year amounted to 240,000. It is expected to remain the same over the next 6 months. The business is expected to receive April and May's commission in April. So it makes it a bit more complicated. Commission income is an income. So our first step is to take 240,000 divided by 12, which means it equals 20,000. Don't get confused with that 6 months. It says the commission income for the year amounted to 240,000. And it's expected to remain the same over the next 6 months. So there's not going to be a percentage increase or a percentage decrease. It will be expected to remain the same. But now it says the business is expected to receive April and May's commission in April. So when we're looking at the cash budget, we are going to receive 20,000 times 2, which means expected receipt in April is 40,000. There's no entry then in May. Our expected income for April is 20,000. Our expected income for May will be 20,000. So be careful with this. I'm not going to have in the cash budget for May as well commission income 20,000 because we expect to receive the commission for April and May in April. So that month we expect to receive 40,000, but the monthly income will be 20,000. Number 8, the water electricity account of 1,800 for March 2022 will be paid in April. The expected monthly expense on water electricity is 2,500. So we're going to budget monthly that our expected expense is 2,500. But now in April, we need to pay that which was outstanding in March on top of the payment that we need to make for April. This means in April, we're going to have 1,800 plus 2,500 as my payment. In May, 2,500, and my projected income will be the same, 2,500 for April and in May. Number 9, invested 150,000 into a fixed deposit 2 years ago at a rate of 12% per annum. And interest is receivable monthly. A third of the current amount will mature on the 1st of May 2022. So this means to calculate the interest, we're going to take 150,000 times 12% times 1 divided by 12 to find the interest that is receivable. This will be my interest that we'll receive in April. Because, remember, a third of the current amount will mature only in May. 1st of May, so we expect it to happen in May. This means my projected income for April is going to be 1,500. Now, a third of this will mature in May. So 150,000 times 1 divided by 3 means 50,000 is what we expect to come in May from this investment. Now to calculate the interest, this is the part where you need to be careful now. My investment is now only 100,000 because 50,000 matured. So interest must now be calculated 12% for 1 month on 100,000. And that equals 1,000. This will be my expected income in May and will also be my expected receipt in May. So be careful with this fixed deposit with the interest and the fixed deposit that's maturing as well. Number 10, an amount of 3,425 for packing material bought on credit in April will be paid in the following month, which means that I'm going to indicate expected payment that we're going to make in May, 3,425, and that will be my expected expense in April. I'm going to do this one again. An amount of 3,425 for packing material bought on credit in April. So in April, it was bought on credit. Packing material is an expense. So it would have been my monthly expense for April. But this expense will only be paid in May. That's why it's indicated as a payment in May. So this activity really focused on ensuring that you understand what goes into a projected income statement and what goes into a cash budget. The more you practice this, the better you will become at it. Question 3.3, internal control. The information below relates to farm traders for September 2022. The business is owned by Maxi Ford. Required? Maxi is concerned over the control of advertisement in Information A. Provide a reason for this concern and a point of advice. Quote indicators to support your reason or figures. Number 2, Farm Traders is planning to buy a new delivery vehicle to deliver goods off the business premises. He expects his sales to increase by 40% in the first month. Explain how this transaction will affect the business. Use figures to support your answer. So we are going to practice now a little bit of internal control and how you need to look at the figures and let the figures guide you in when you're answering. Don't just look at one item on its own. There's a reason why they provide you with total sales, advertising, and then they set advertising amounts to 2% of the total turnover. So our first step is to analyze the figures. Look at what is happening. If I'm looking at my sales, we budgeted 420,000, but the actual was 386,400. So we received less than what we budgeted. Our sales were less than what we budgeted by 33,600. So work this out as a percentage. This means it was 8.7% less. So we take the difference. Just a correction there, we have to take 420,000 minus 386,400, which means it was 33,600 less. Divided by 420,000 gives us 8%. If we're looking at the advertisement, our advertisement went from 8,400, which we budgeted, but we actually spent 9,660. So we spent 1,260 more. And if we work out the percentage, we divide that by 8,400. It gives us a 15% increase for what we spent more on advertising. So if we're looking at this, advertising, we're budgeting 2% of the total turnover, of the total sales, which means that if our sales is less, we should have actually then spent less on advertising, yet we spent more on it. If we're comparing now the budgeted figures, it's 2%, but the actual, if we're looking at the percentage, and we take 9,660 divided by the turnover, the sales, it gives us 2.5%. If we're looking at what we should have spent 2% on our sales, which is 7,728. Yet we spent 9,660, which is 1,932 Rand more. And if we look at that percentage-wise, it is 25%. So to indicate this now, the problem is the actual sales are less than budgeted. It's 33,600 less, which is equivalent to 8%. Advertising is more than what we budgeted for. It's 1,260 more, which is 15%. Advertising is budgeted 2% on the turnover, yet we actually spend 2.5% if you look at 9,660 and you divide it by the total sales. Advertising should have been 728, yet we spent 9,660. So the problem is clear here. Our sales decreased. Our advertising should have decreased as well, yet we spent more on advertisement. Now, if we spent more on advertising, but our sales actually went up, then that wouldn't have been a problem. Yeah, we spent more on advertising, our sales were less. That is a problem, which means the advertising wasn't well controlled. So advice, review the advertising strategies implemented by the business or implement better methods that will promote sales. Investigate if the business is using the correct method of advertising. So we could have spent more and we would have thought, well, this might work, but in actual fact, it didn't work. It wasn't the correct method that we used to advertise our business, our product. Investigate if the business is responding to the demands of the customers. Are they supplying the goods that the customers are preferring? So this is all advice which you can give, identifying that the advertising was not well controlled. Number 3.3.2, Farm Traders is planning to buy a new delivery vehicle to deliver goods to customers for free who live within 10 kilometers from the business premises. He expects sales to increase by 40% in the first month. Explain how this transaction will affect the business. Use figures to support your answer. Again, I'm going to say there's a reason why they provide you with figures. So they provided you with salaries. This is an extract from the cash budget, fuel expense, maintenance and repairs and insurance. So if we look now at budgeted and actual figure and we're looking at our sales, it is expected to increase by 40%. Which means that our sales will increase by 168,000. This is what we expect to happen if we buy the delivery vehicle. So 420,000 times 40%. If we look at what we need to consider, a driver will need to be employed. Now, if we employ a driver, we need to pay that driver a salary, which means the salaries of 72,000 will need to increase. If we're looking at fuel, we budgeted 12,000. That will need to be adjusted upwards because we're going to spend more on fuel. Remember, within 10 kilometers, we're delivering it to customers for free. If we're looking at maintenance and repairs, 15,000 is allocated to maintenance and repairs. We will need to adjust that upwards. If we're buying a delivery vehicle, that delivery vehicle, we need to budget for repairs for it. 4,600 is allocated to insurance. That will need to be adjusted upwards because now if we buy a vehicle, we need to get insurance for that vehicle. The business will need to finance the vehicle, which means that the business will need to budget to pay the monthly installment of the vehicle, which will include interest. So that's something else that we need to budget for as well. So these are all things that you need to look at. Thank you very much. Next, we're going to look at activity 4. The secret of your success is determined by your hard work and strong focus on your goal. Best of luck. Have a wonderful day.